Hello and welcome to BloombergQuint. We are in conversation with Expenditure Secretary Dr. TV Somanathan. Hello, sir. Welcome to BloombergQuint. To begin with, my first question would be: a large part of the fiscal deficit spike this year is due to the cleaning up of the balance sheet, so to say. So, can you explain the thought process behind the move and how much this cleanup is contributing to the fiscal deficit in the coming years as well?
We have actually the process of being more transparent with the level of government expenditure had begun earlier. And if you recall, even in the last budget speech, to the speech itself, we had added an annexure 5, which laid out completely the extent of extra budgetary resources that were being used essentially for government programs, including for the food subsidy. So transparency was the first step, but we also did realize that many of us to borrowing by, say, agencies like the National Highways Authority, etc., which are actually productive borrowings by organizations with their own separate and commercial operations. So what we've done this year is to resort to extra budgetary resources for core government activities. We have made a nominal provision of 30,000 crores in next year's budget, which is unspecified. It's not allocated to any ministry. That we've kept essentially as a possible requirement if we have to fund some of the capital activities of some government departments. But other than that, the effective number is it's zero. It's 30,000 in the annexure, but it's effectively zero because we don't intend to use that 30,000 unless it becomes absolutely necessary. The thought behind this was that it is better to accurately, reflect the numbers as they are. And I think that is better for us, better for markets, and better ultimately for everyone. So,
in terms of percentage, how much has it contributed?
Let me give you two numbers. The correction, so this year we began with a budget estimate of about 1.2 lakh crores for food subsidy. We had also explicitly shown an amount greater than that as extra budgetary resources, which would be provided to the Food Corporation of India from the National Small Savings Fund. What we have done finally in the revised estimates for 2020-21 is that we have provided 4.23 lakh crores as against 1.2. So that increase of 3 lakh crores consists of two elements. There's one element which is not a correction. It reflects our package of the Pradhan Mantri Garib Kalyan Anna Yojana, which was the scheme through which we give 25 kilograms of free food to basically 5 kilograms per person to 800 million people for 8 months. That cost was 1.33 lakh crores. So that is not a correction. That is an actual extra, that's not an accounting correction. That's an extra expenditure. So that would have taken it from 1.2 to 2.5. But it's gone to 4.24. Now that difference between 2.5 and 4.2 is the element of recording liabilities that were earlier with the National Small Savings Fund and that have now been taken on budget. So that's about 1.7 lakh crores, or let's say about 0.85% of GDP. So if that is taken off, then notionally the deficit without that correction would have been somewhere in the region of 8.7 or so. But otherwise, so even then, that 8.7 is much larger than most analysts' estimates. So the correction accounts for the difference of about 0.7 to 0.8% of GDP.
It's also pertinent to know the FCI dues. What is the FCI dues that we have outstanding right now, and how much did we clear it in this fiscal year, and how much are we going to keep for the next fiscal year?
We have cleared a substantial amount of dues this year. I do not, unfortunately, I have the paper, but I don't have it with me readily. It's at the end of 2022, we expect that the old arrears of NSSF dues of FCI will be about 59,000 crores. We've repaid about 1.5 lakh crores.
And I think the total outstanding due of FCI is to the tune of 3.75 lakh crore.
That will come down to 59 at the end of 2022.
Okay. How much have you budgeted it in the next year?
2.53.
2.53. Can you also give us a perspective on how do we want to move to a fiscal light path of 4.6% by FY?
Not 4.6, below 4.5. Below 4.5. The word used is below 4.5, which could be And it may not be 4.1, it could be substantially less also. It depends on the way the trajectory evolves. But yes, it will be below 4.5. So there are, and the minister also mentioned this in her speech, two main, in a way it is very simple, just keep the receipts rising much faster than the expenditure. I mean, that's to put it very simplistically. But how do we do that? One is an increase in receipts from monetization of assets, from privatization of public enterprises, and from increased tax compliance. So that's the way the receipt side will grow faster than just the rate of nominal GDP. And on the other hand, we would like to keep expenditure within reasonable limits while focusing on an improved composition of expenditure, pushing more of our budget into capital expenditure, which is very labor intensive. That is capital expenditure of the labor intensive kind, such as infrastructure projects. So that would be the priority. In expenditure, it will be compositional shift, and receipts would be expected to grow faster than that.
Can you give us more details about the composition? How would it be lined up in this financial year, the coming financial year, and the next few financial years?
The coming financial year, we have, very simple way of looking at it is that the rate of growth of capital expenditure in the coming year, vis-a-vis the budget estimates of the previous year, it's grown by 34.5%, from 4.12 lakh crores in the budget estimates for 2021 to 5.54 lakhs crores in 21-22. And by the way, this is in spite of the fact that we are now fully providing for the food subsidy, etc., etc. So this means that the budget for capital expenditure is growing at more than twice the rate of growth of the aggregate budget, which is growing by about 13%. So from 30.42 to 34.8 is the growth in the aggregate expenditure, whereas the growth in capital expenditure is from 4.12 to 5.54. So incrementally, a lot of the money that we are providing is going into capital. So out of an increase of about 4.4 lakh crores in the total expenditure, 1.4 lakhs is capital. So at the margin, the share of capital is about 35% of the total is going into capital.
This is for the next year.
For the next
and
year.
What about up till FY26? What is the outlook that you want?
That is not something that I can precisely comment on. I can say that our intent is to continue to focus as much of our expenditure as possible on productive infrastructure, things that build the capacity of the economy, and as little as possible on recurrent things that don't build capacity.
Analysts have pointed out that much of the fiscal consolidation that is happening in the next fiscal year is on account of a squeeze in the revenue expenditure. So can you also
Yeah, let me explain. Some of that so-called squeeze is merely the disappearance of COVID special circumstances. So for instance, next year we will, assuming that there is no exogenous shock of the kind that we suffered in the current year, we will not have the special provisions that were needed for so many things in COVID. We will have the 35,000 crores for the vaccines, but other than that, we don't have those special, all the packages that were announced, which various analysts have said were worth 2% of GDP. Almost all of them were on the revenue side. They won't recur. So the squeeze is not so much a squeeze as the disappearance of shocks that were present this year. That gives us the space, without increasing aggregate expenditure, to change that expenditure towards capital. There are one or two more questions that I think keep coming up. Somebody's pointed out that, the agriculture budget is not rising and in fact is falling slightly. There's a reason for that. The biggest program in the agriculture sector is the Pradhan Mantri Kisan Yojana, which is the direct benefit transfer. So one very large state doesn't participate in that scheme. But when we had budgeted, we had assumed all states to be participating. So during the year, that money is getting surrendered. So that brings down the revised estimates. And next year, we've budgeted realistically on the assumption that this year's pattern will continue. Of course, if that state were to come back, we would provide. And we would, if they decided to join, we would, provide money for it. And similarly, in many cases, we've looked at money that is released but unspent. That too has not been provided because it's not required if it's sitting in a bank account waiting to be spent. So other than that, there's not much of a squeeze. But yes, we have taken a realistic approach to budgeting of recurrent expenditure.
Can you also share some perspective on the subsidies? I mean, as a percentage of total expenditure, how would it be lined up in the next few years, if we talk about?
It's difficult for me to speak about any specific figure there, because let me only say this, that in our budget estimates for next year, we have not assumed any changes fundamentally in the structure of subsidies like food and fertilizer. That's our working assumption. But the concerned ministries are working on a number of initiatives. But we have been conservative and not assumed any, savings on those accounts. But if something does come, then that will help us in terms of, improving further the contribution that we can make towards, infrastructure and other capital projects.
In an interview today, I read it in Business Standard, I think. You've said that when it comes to the Finance Commission recommendation on fiscal deficit, you treat it as a guidebook. But for states, you've accepted the recommendation. So is it not uncommon in that sense, or can you give some perspective?
Let me make a very clear distinction. The Finance Commission's role is in terms of flow of resources to states. That is the role of the Finance Commission. The Finance Commission is not, even in the Constitution, required to decide the budget of the central government. So the opinion of the Finance Commission on matters relating to states is part of its core function. And that's why we give it a very great significance when it comes to what needs to be given to the states. And this is exactly what was done with the 14th Finance Commission also. For example, the 14th Finance Commission said 3%, but with an extra 0.25 and 0.25 on meeting certain conditions. That was implemented. So the recommendations in respect of states are the core mandate for which the Commission is set up. It is to decide on fund flows to states. The recommendations of the Commission on the center were in response to a specific request from the center to give an opinion on the fiscal issues of the center. That opinion has been received and we are giving it the weight that it deserves.
When it comes to
but it is not part of the mandate of the Commission to basically decide the central budget. That's the constitutional position.
Fair enough.
That is why there is a distinction.
Yes. On the borrowing side, would also like to know, sir, the composition of the borrowing going ahead, in the sense that will we revert to a market-led borrowing, and what would be its impact on the GSEC?
I wouldn't like to comment. It's my colleague, the Secretary Economic Affairs, who's actually in charge of that compositional decision and so on. But I think they've already given a figure of 12 lakh crores as market borrowings. So I think that is whatever is in the deficit but not in the 12 lakh crore is obviously coming from other sources. And there are many other sources. There's external borrowings from international agencies. There are public account deposits that we get. There are many other sources. So the market borrowing figure that the Department of Economic Affairs has given, I think, is 12 lakh crores approximately.
And what about the debt to GDP glide path? Because this is something which the budget doesn't touch upon.
No.
And it is, as per the FRB mandate, 60% is the ratio, debt to GDP ratio that is supposed to be kept.
There's one thing that is certain, we will not be at 60%.
Okay, so what would it be likely? In what range do you think?
The Finance Commission has given some ranges in its report. It's because remember the 60% is center plus states combined.
Yes.
So this year, both the states and the center together, the center at 9.5 and states will be beyond 4.5, because many states have actually carried out the reforms that were required of them. There were two components. They were allowed to go from 3 to 5. 1% eventually was unconditional, and the other 1% was conditional on accomplishing certain reforms. Many states have completed many of the reforms. So we expect the average will be at 4.5 plus. So 4.5 plus on the state side, 9.5 central would take you to about 14% as the deficit of the general government deficit this year. So that, with a declining GDP, will have an impact on debt to GDP. Because if GDP grows, when the denominator doesn't grow and the numerator has grown, there will be an impact on debt to GDP this year. I would suggest you take a look at the Finance Commission numbers. It will be upwards of 80% definitely.
But how much would it be in the coming years? Do we see the glide?
We have not set a path for that because it is dependent on so many variables that is not something that we want to project or fix right now. And as the Finance Minister said, The amendments to the FRBM law will come eventually to Parliament, at which stage we'll have more clarity on which indicators and which parameters will be monitored.
When it comes to the allocation to NREGA, some analysts have pointed out that the allocation has come down to 0.3% of GDP compared to 0.6% of GDP in FY20. So with the kind of impact that we have seen COVID has on the job market, and with no employment scheme for the urban areas that we
I think
framed as
first, I'm not sure that about those numbers, whether you're talking about FY20 or FY20, 0.6%.
Yeah.
That must be the final number. Yeah. See, NREGA, we always provide, it's a demand-based scheme. Money is provided as demand emerges. In the current year also, we've provided much more than 0.6% of GDP. Whoever has analyzed that has not given the figure for FY21, which is much more than FY20.
That is the pandemic.
That's right. So it's 1,11,000 plus is what we spent. So next year, we have made an assumption in the budget estimate that's provided for FY22 is pretty much the same, slightly higher than FY21. But that assumption is on the basis that we don't have the pandemic next year. If there is additional demand, we'll augment it during the year. But without the pandemic, we think that is approximately correct as the likely figure on the demand-based requirements of NREGA. So NREGA is not a scheme where you say it should be X% of GDP. It depends on how many people come up and ask for work.
But it's also,
if the economy does better, the demand will be less. If the economy does worse, demand will be more.
It's a key stabilizer in the rural economy.
Correct.
For sure.
But it will not, the number is not the ceiling. The number is the initial provision.
That's true. When it comes to expenditure in health, we have seen in the budget speech that there's a rise of 135% in the expenditure towards health and well-being. But a major part of the increase is on water and sanitation and not so much on nutrition. So can you say or tell us some, why?
Partly because you see, with a lot of schools closed and the meal programs, there is some uncertainty about how much of the school-based nutrition will actually flow through. As regards water and sanitation, the first thing I must say is that water and sanitation, according to the World Health Organization, they have what is called a WASH agenda. It's water and sanitation and hygiene, WASH. So WASH is part of the core preventive health requirements of countries, and countries at higher stages of development don't spend much on it because they already have piped water and sanitation. We don't. So for us, the normal diseases that we face in a normal year when COVID is not rampaging are diarrhea, typhoid, malaria, dengue, which are either because of unclean water or because of stagnant wastewater. So addressing drinking water and sanitation is actually core to public health. It is not in any way peripheral, and it's not some odd thing that has been clubbed. It's actually front and center. And the health program is meant to solve the health programs of the coming years, not the pandemic of the current year alone. So it's a holistic approach to health. And I think it's a very legitimate thing that it is part of that. And I would also point out that the core health ministry budget has also risen substantially. So if you look at, when you take the vaccine provision into account, it's gone up by more than 50% in the Ministry of Health and Family Welfare. And at least in my book, vaccines have something to do with health.
Sure. Also, one of the commentators pointed out that the Central Road Infrastructure Fund is also included under the...
Turn this way.
The Central Road Infrastructure Fund is also included under the health scheme. Is it true?
No, the Central Road and Infrastructure Fund is money that comes from a cess, which is levied. It can be used for multiple purposes. It can be used for roads. It can be used for railways. It can be used for health infrastructure. It is a source of funding. It is part of the aggregate revenues of the central government. Using that for health does not in any way either reduce the health budget, If it was not used for health, it could be used for railways, and we could use general budget for health. If that will please somebody, I'm happy to do that as an accounting entry. But it is an insignificant point because it's the CRIF money is part of the aggregate receipts in the Consolidated Fund of India. And it is an earmarked portion that goes into health every year.
When it comes to the setting of ARC,
So it doesn't reduce the health budget that it's coming from CRIF. It's not, so, the fact that it comes from the CRIF, if anyone is suggesting that therefore it is not a legitimate health expenditure, I think that is completely wrong. It's a source of funding. It is one of the sources of funding. It's an accounting of the CRIF. Some of it, yes, some of our highways money is funded from CRIF. Some of our railway budget is funded from CRIF. And some of our health budget is funded from CRIF. These are all coming from the same sources of revenue, which are shown in our receipts books and which are part of our receipts in the fiscal deficit calculation. So it's an internal accounting entry whose significance for assessing a health budget is exactly zero.
When it comes to the announcement for an asset reconstruction company, we see that there is no provision being made in the budget towards it. So
it will not be funded by the government.
Okay.
The asset reconstruction company will be capitalized by banks.
Not even guarantees in the form of guarantees?
There may be guarantees, but guarantees don't require budget provisions.
But that would not.
No, the guarantee doesn't require a budget provision. There is likely to be a guarantee. Okay. And we are committed to providing that if it is required.
Last question.
We are in discussions with the DFS. They have indicated that there may be a need for a government guarantee, and we are prepared to make that guarantee available. But that doesn't require it's not something that is a budget provision.
What kind of guarantee would it kind of require?
It is being worked out by the Department of Financial Services. But in principle, we would be willing to back whatever is required to make that institution a success.
Even any kind of money that the public sector banks put into it would also eventually be coming from the Consolidated Fund of India, is it not?
No, absolutely not.
Okay.
Absolutely not. There are some weak banks for which we have provided 20,000 crores for capitalization. That has nothing to do with the creation of the ARC. Many of our banks don't need any capital from us. Okay. SBI, for instance. So capitalization of the institution will come from the banks themselves. And what they put into that institution, a lot of it will come back to them as cash when they dispose of the stressed assets to the institution. So actually, the capitalization of that institution is likely to be cash neutral for the banks.
Okay. And since you talked about recap, one of the things is that in this financial year, we saw the issuance of zero coupon recap bonds. Mm-hmm. So would we see a zero coupon recap bonds?
I am not involved in that. That's the Department of Economic Affairs and the DFS. I can't comment on that.
Because that's also an important criteria, because interest is something which is a cost.
You're asking the wrong person. Okay. I can't comment on it. Yeah.
Thank you so much for joining us.
Thank you.
Thank you.